Here's the GJ trade from this morning. Classic New York open kill zone trade. You see price hit the mean threshold of this 5-minute order block. We are currently running 45 pips. EU, we entered here at New York Open, got stopped out, and I'm about to re-enter this trade. As soon as price gets back up into this level, if price gets back up into this level, I will be re-entering that. And I also sold off on SPX 500 right here, and also about to re-enter this trade if price can get back up into this level. I also wanted to point out this gold trade. GJ, we also sold off last night. This is what that trade looked like, and it is running currently 100 plus pips. Overall, good day. Took a couple losses, but it is what you make it. All right, so there's 3 trades I'm looking at getting in. I want to re-enter GJ when price returns back up into here. I want to sell Euro USD as price gets back up into here. And SPX 500, I have a sell limit right here. Go ahead and place it right there. But the GJ trade looks like it's playing out nice. That 15-minute fair value gap rebalanced, repriced up into there. Euro USD, I was really hoping we could get back up into here. I know that's kind of a large fair value gap, but I'd be willing to suffer the drawdown. I'm super convinced in this down movement for today. We jumped the gun right here, got stopped out. They ran out buy side liquidity here, and then a displacement to the downside. So that's a good thing. It's okay that I lost this trade. It's okay because I needed that to happen to see what they was willing to do. They could hold price into a consolidation until FOMC. So y'all be aware of that. I'm willing to take the risk. I'm trying to get in sync with the marketplace. So when FOMC does kick off, hopefully I can catch the volatility injection and ride the wave. That's my intentions. All right, we got our sell limit. It almost got activated. All right, so like I was saying on gold, right? I sold gold from up here and got a nice push down. I'm going to hold this trade. I really like the way it looks. On the 4-hour, price traded up into this fair value gap and it's showing a strong reaction from that level. So I'm in gold right now. I already closed partials once, but I'm chilling on that. I'm going to hold it. We're getting a nice push down right now. That's what I wanted to see. Anyway, this Euro USD trade, I was looking for price to take out this high, that lower the fair value gap. If price doesn't get up in there, then I will work my way in on the 5-minute time frame. I'm really waiting on this new hourly candle to open to see if we can't get a continuation down on GJ. All right, so I had placed a sale at 98 right here. I placed a sale right there. And I also have my sell limit still in place. But like I said, it looked like once we got this run up, it looked like price did not want to get back up into that level. So I placed the sell on it just to secure the position. And this is why. That's the reason why. GJ, same. SPX, don't know if it's going to get back up in that level. Gold still doing great. Gold took off so fast and didn't really come back. I was going to try to post it for y'all, but didn't get a chance. But GJ, y'all should have popped that entry. This is a classic institutional order flow entry drill, displacement, rebalance, repricing up into the sell side imbalance in order to hopefully I have targets on the downside. Here's a target right there. We have relative equal lows way down here that I really want to see get hit, but I don't think that would happen this week. We do got another area of accumulation right here with a volume imbalance from the weekly opening gap here that could get touched this week. So yeah, a lot of people get mad in revenge trade. I don't do that. I got pissed off earlier because this Euro USD trade that pissed me off. So I came back and I was like, okay, you want to fuck with me? And I literally just banged out like back-to-back trades. I'm running $5,200 in profit right now. On my live account, I'm running $1,600 in profit right now on my funded account. And that's what happens when I get pissed off. I just basically closed a partial. This is two positions right here. This is this position and this position. So I basically just closed half of those two together. Gold still doing good. I honestly, I might just hold gold, to be honest with you. I might just hold gold, like place my stop loss and break even, because I really like where gold's sitting at right now. I like the way prices rejecting this area right here. And if you look at the 4 hour, I mean, there's the daily fair value gap, and we can refine that from this 4 hour fair value gap, right? And I just really like it. I don't ever trade gold. I used to be a big gold trader, but I mean, I just seen the way price was reacting from this level, and I had to get it. I caught the Euro USD trade on one of my accounts. I missed the Euro USD trade on my funded account, and that kind of pissed me off a little bit. But and now look at it. As soon as I said that, it's like slapping me in the face. Look, this is what I be trying to tell y'all, right? Like once you see a move play out, right? Like this run up on Euro USD, we was anticipating for this level to get hit. It did not, right? Okay. After that happens, y'all got to learn how to get on these 5 minute, 1 minute time frames and get in the fucking move, right? If you feel like price is going to expand from a 5-15 minute perspective, you hop down on the 1 minute time frame, and it's gonna price is fractal. So you're going to see the same thing play out. Look at this. Look at this entry here. There's an entry there, right? Here's another entry right here. That's two entries right there after you missed it. After we missed it, boom, we could have got in there and there. You're a GJ, for example. If you didn't get in up here when I told you to, look right there. There's one. And here's another one. It gave you like 3 opportunities to get in. 1, 2, 3. Here's another one. You know, like just wait on the logic pullback on the 1 minute time frame. It's gonna give you opportunities every time. And that goes for any fucking asset. It doesn't matter. Like if you feel like the daily range, the daily expansion is occurring at this moment, then take advantage. How many times? I mean, it happens to me all the time. Y'all just watched it happen with this sell limit right here. Missed it. It did not hit it. It did not get me in, but I still caught the trade, right? Sometimes it's gonna go against you. Sometimes it's not gonna work out like that, but you're in tune, you're in sync with the marketplace. This is what that looks like. You got to go with what you know, we analyze these charts, we go with our analysis, we go with our gut feeling. You can't be scared of being like, you can't be scared of being wrong. Like, we're all gonna get it wrong. But those times you're right, you're gonna bang it out. Like honestly, I was thinking about this area right here. It's risky, you know what I'm saying? But definitely possibility if we're gonna keep expanding lower. I really think this target will get hit, bro. I think this is our next draw on liquidity. This low right here, previous day's low, I think it's gonna get hit today, and I want to be a part of it. Gold still doing good. SPX is not going to give us a chance to get back in it. 1 minute time frame. It's a possibility. But I knew I should have pulled the trigger earlier. But you know what? We'll just keep an eye on that when FOMC hits, because that could possibly be a good level to re-enter it. I caught a real good sell on this earlier, like I was saying, from this fair value gap. I waited and waited and was patient. I was telling the dude Jay earlier, he did execute a sell on this, but this is something I see a lot of people do. All right, well, his POI was too far up. This was his POI right here. And I told him that he needs to be aware of these equal highs. And as soon as those equal highs get ran out, I told him that that is where I would be selling from. Unfortunately, I did not sell from here, but I didn't need to, right? I already knew in the back of my mind what was going to happen right there. And after it happened and we got that displacement, I wasn't on the charts when this pullback happened, but I was on the charts when this happened and I caught it. So at this point, we just need to wait. GJ is looking good. We're taking out this liquidity here right now. So that would be a good place to close partials. Just from here to there, that's a trade, bro. 32 pips. I want to participate in the daily expansion. And if I'm swing trading, it's different. But most of us are scalpers, right? We want to get in here and participate in the majority of the daily expansion. So you want to wait on London session to play out, because you know if it's bearish, London session is going to give you that high of the day. And in some cases, New York Open will give you that high of the day, like yesterday and possibly today. Like this trade right here, I got stopped out above this high, but it jammed down for 17 pips. It took out these two equal lows right here. That's when I should have at least closed partials, and I would have mitigated this loss. But it didn't happen like that. But I capitalized on it, waited on price to show me what it was wanting to do. And as soon as this liquidity got ran, we entered a low risk sell model. As soon as that high got taken, that's called turtle soup. Entering a trade as price is running out liquidity, that would have been a good sell, but I didn't catch it up there. But as soon as that high got ran out, I pretty much knew what it was going to do from there. And you know what? It doesn't matter. Like if price turns around right now and goes bullish and just takes off, I'm cool with that, because I already caught the majority of this move. I caught the majority of this move. Same for gold. You know what I'm saying? It doesn't matter. Like SPX caught this. It could turn around and go bullish and go all the way to the moon. Doesn't matter. Like we already secured profit, and that's how you need to look at it. Small price swings. Learn how to operate in small dealing ranges. Going into London close, there's going to be times where you are going to take profit. And also going into London close, there are going to be times where it presents a trade opportunity, and you should know which one is going to be, right? Like this was my nearest draw on internal liquidity. It got hit, and now price is showing a willingness to want to consolidate, right? It could keep going down. I don't know. If it does, I got a runner. I left some on. But I'm always prepared for that London close hour to give me a strong retest or go into a consolidation. Or if price is pulling back into a level, just say price looks like this, and just say price looks like this, and we're going into London close, and it's pulling back up in here. That would be a area for you to take advantage of and go short, right? If London close is in an area like this. But if London closes in an area like it is right now, then you should be looking to close the majority of your trade because of the behavior of London close. And look right here, this is a perfect example of it. Here's London close going into 12 o'clock. We got a huge run up, a spike down. We ran out previous day's low, and then we sputter out the rest of the day. Same right here. Here's New York Open. Here's London close. This is the area that you want to be dealing in. And you see, I sold up here, took profit, closed the majority of my trade, all of it. Ended up getting out right there, I think. But that's it. That's what your trade should look like. This is what I scream to you guys. Operate from New York Open to London close. And y'all see me do it almost every day. When it comes to GJ, y'all will see me trade like I did last night. I would be looking for like a trade opportunity presenting itself going into midnight, or sometimes during Asian session, because it's a different currency pair and it moves in different times. Like GJ will trend during Asian session. It will trend during every session. That's one of the reasons why I love trading GJ. This $10,000 account is almost at $250,000, y'all. I hope I was able to help somebody. I'm sorry I'm so back and forth today. You know what I'm saying? I wasn't able to focus like I wanted to. Tomorrow will be different. I'm gonna revisit and hop back on when FOMC hits. We got roughly 3 more hours, y'all. So if you missed out, don't go chasing price. Let's wait until this volatility injection occurs, and we will try to piggyback on what FOMC throws at the market. All right, y'all. Peace out. Stay tuned. What's up, y'all? I'm just about to do a recap of the trades that were taken this past week and show y'all the results from yesterday's FOMC. Now, I went through and tried to find all the screenshots of the trades that I took. Didn't end up taking all the screenshots, but I did get the exact entries and exits for the trades that I did take. All right, we're gonna start off on Euro USD on Monday. Okay. I actually took a trade on Sunday, which was a buy. It was a long position from here to here. This little run up, and I had my take profit sitting at that high. So there's that. Going into Monday, New York Open, we had this initial push down during London session. And going into the 5 a.m. hour, we had a big run up. And right when this happened, we created a fair value gap right here. And that is where I entered my trade. And I took profit right here going into the London close hour. We're going over to the next day on Tuesday. And this is what my trade looked like. I believe I entered somewhere right here and took profit going into the London close hour. All right, going into FOMC. I need to get on the 1 minute time frame to show you guys this entry. My entry was right here at the bearish breaker. Right there. And I actually held this trade all the way through until today at New York Open. And here's the screenshot of that trade, if you can see it right here. And I held that trade all the way over until today. And I did try to go long on Euro USD and got stopped out right in here somewhere. So that's it for Euro USD. Let's go over to GJ. We will start off on Tuesday. And here's the screenshot of that trade. Courtesy of ICT's turtle soup concept. As you can see, here's my buy entry right here. As soon as price traded down and took out this sell side liquidity, I found my way inside of this long position and rode it up for a nice gain. So again, we're gonna have to get down on the 1 minute time frame. All right, so here we are. Price trade down, taking out that low located there. And as soon as price went into this consolidation, I waited on it to break out of the consolidation and trade down. And that's when I jumped in this trade. And I held it all the way up until we started consolidating and closed it. So it was roughly about, I don't know, 50 or 60 pip gain. But I did hold this trade all the way to over here, going into the new daily candle. All right. Going into the next day, we had this 5 minute fair value gap right here. Is what I stem my entry off of here. And I actually entered this trade right here at 12:27 a.m. I know that because I sent it out to my signals group at approximately 12:27 a.m. on November 2nd. And I will show you guys that right here. I placed the sell on GJ at 12:27 a.m., which is roughly right here. And I held this trade all the way until this morning. I placed another sell right here at New York Open. My initial sell is the teal color box right here. And my second sell is right here in the green box. At New York Open, I entered this trade right around here in this area. Placed my stop loss above this high. And I held it all the way until this. I held both of these trades all the way until this morning. And I ended up closing both of these trades right around in here somewhere. Okay. There's a screenshot of one trade right here. GJ 1 hour chart. I held it for 2 or 3 days. And here is the other entry. 169,204. Right around in here somewhere. And as you can see, that trade did beautiful numbers. 450 pips here, 385 pips there. So that's roughly 800 pips there, another 50 there. Almost 1,000 pips on GJ this week alone. Euro USD, let's see, we had roughly 20 pips there, 50 to 70 pips, 70 and 45, that's 115 pips, 315 pips on Euro USD. That's roughly, I say about 900 pips on GJ. Let's go over to SPX 500. And this screenshot right here is basically a before picture of right here before FOMC. Okay. This is roughly 1 p.m. and FOMC kicked off at 2. So this was exactly 1 hour before FOMC, and this was my setup. I seen relative equal highs resting here. Buy side liquidity pool. I seen a fair value gap up here and here, and I wanted to see price dig up into this level and roll over. Okay, as you can see, this is what the trade looked like right here, and this is my entry on it. And I also have that trade recorded, and in the recording that I have on YouTube, I closed that trade early because it was a trade that I placed on Trading View. Here is my MetaTrader trade. I actually end up holding that trade, and I didn't close it until today. Okay, right here going into New York Open, I closed this trade. So that is roughly 1,700 pips or ticks on SPX 500. All right, now we're going. I also just bought SPX 500 today. Going into London close, it was right here, and I closed this trade as it was taking out that high right there. So there's another 215 ticks that we can add on to here. 1,915 ticks, pips, whatever you want to call it. All right, now let's work our way over here to gold. Okay, FOMC. Well, pre-FOMC, I entered this trade. Okay. It was basically another turtle soup trade. Shout out ICT. Okay, this was the reasoning behind the trade. This is gold, the 4-hour time frame. And you can see here is my execution, right as price took out the high, and this 4-hour fair value gap. Okay. So real quick, I will jump over to the 4-hour time frame to show you guys what I seen. Here's that high. That's that purge of buy side liquidity. And here is the 4-hour sell side imbalance, buy side inefficiency. Right there. So we'll drop down to a lower time frame, and I'll show you what this trade looked like. First, let me get my screenshots back over here. All right, y'all seen the 4-hour, right? So I'm gonna delete that. Now here is the lower time frame screenshot of 15-minute. You see I entered at 1656.80, and I closed this shortly after I took this screenshot. And the reason I closed it is because of FOMC, which was a very smart decision on my end, because you see we whipsawed. So it was 1656.80. All right, so that was my entry. And it ran for over 1,000 pips, okay? Or ticks, or whatever you want to call it. 1,060. Unfortunately, I did not get back in this trade after FOMC ran out this buy side liquidity. If I would have been paying attention to it, I definitely would have, and I would have did like I did on the other three trades and held it until New York open today. All right, but unfortunately, I did not because I already had three trades open, and I don't usually have three trades, three different pairs open at one time, but it was very irresistible. Very irresistible. Now, today, I found a beautiful setup on gold based on this 5-minute fair value gap here. Now, going into New York Open, I noticed that we had this strong push up, which was a shift in market structure for me in my eyes. And then we had a deep pullback, which I didn't really like how it pulled back so deeply. But it looked like it respected 50% of that 5-minute order block, hit the mean threshold, and started working its way up. So what I did was is sit back and watched it. And we had this displacement creating this buy side imbalance, sell side inefficiency. And this was the result of that. So I placed one position up here, and I placed another position down here, and I had a beautiful gain on that trade right there. Okay. Price traded down into it, came back, and I closed this trade right when that high got taken out. And just just to let you guys know, a lot of my trades are basically small price swings. Um, that's really how I grew my account. That's really how I love the trade is catching small price swings. Now, I know I just showed you guys examples of me holding trades for, you know, 2 days or a day and a half, like I did on all of these, but it's not too often that I do that. And I do swing trade, and I have been getting into swing trading a lot lately, but scalping, I really wouldn't even consider it scalping. I mean, it kind of is, but I like to find a decent setup at New York Open and hold them trades going into London close. Or like this trade, for example, if I see a displacement during New York and price retesting going into London close, that is another trade opportunity that happens often. And like I did today, I took full advantage of that and bought gold here and wrote it up to take out this high. Now, gold probably will continue to trade up, but I'm not interested in holding a trade going into the new daily candle because spreads go crazy. Um, it's just it's not necessary. If you can't get a decent percentage gain from here to here, then you need to reevaluate your risk on each trade. A lot of people are very timid and scary when it comes to trading, and they don't understand the power of leverage. And this specific strategy that we are trading allows you to some people might call it over leveraging, but I don't, because the risk to reward is insane with these ICT concepts. They're insane. For example, this is what my risk to reward looked like. I had my stop loss under this 5-minute order block. This was our current dealing range. What makes this our current dealing range? Okay, we have a swing low here. Well, how come it ain't this swing low or this swing low? I just get the most recent swing low. All right, so price look like this. So when price looks like this, you want to get your most recent swing low, and that is going to be your current dealing range. You don't want to drag it all the way down here or even here, because 9 times out of 10, price is not going to come back down in here. Why? Because all of this is balanced. We'll get on a 1-minute time frame, right? Look at all this balanced price action. All of it is balanced, right? Price expanded, a deep retracement, right? And each time price expands, it pulls back, right? Boom, boom, boom. So why even anticipate price to pull back that far? You get what I'm saying? This displacement right here is what I base that entry off of. And I'll show you real quick. Right here is the before screenshot, right? It was a 15-minute fair value gap, which was right there. Okay. It did overshoot it, but it overshot it over some wicks, right? But if you flip to a line chart, you can tell that the volume stayed inside of that fair value gap. And that's what's important to note, is that a lot of people really want price to stay inside of that fair value gap so they can place their stop loss right at the bottom. That's what finessing these time frames are good for, right? So this was my initial POI. This is what I told them I wanted to enter from. And in a perfect world, price would have did this and automatically reacted and traded to the upside, right? But we always have to hope for the best and prepare for the worst, correct? So we had the 15-minute POI, and I will highlight this with a couple trend lines. All right, so that was our initial POI. I dropped down to a 5-minute time frame. It's all about incorporating time frames. You have to incorporate, you have to finesse. So I dropped down to a 5-minute time frame, and I found another fair value gap. So look what it's doing. It's filling in the 15-minute fair value gap for sure. But when you drop down to a 5, there's a larger buy side imbalance right there. You have a 5-minute order block right here. And I was thinking to myself, as price was trading down into this level, that if price violates 50% of that 5-minute order block, then I'm not going to be too comfortable holding this trade, right? So here's our order block and our fair value gap. It's a very, very solid setup. Going into London, this is a London closed kill zone, right? And once again, the risk to reward is insane, all right? Your stop loss should be safe right below 50% of that order block. But in order to prevent a wick being wicked out of a trade, place it at the bottom. And if it comes down here and hits the bottom of this order block, you need to reevaluate the trade. And I know this might not seem like a lot, And too many traders get too caught up on trying to get very high risk to reward ratio trades. That is not what trading is about, bro. It's not about that. Like, let me show you how much money I made on this trade, right? I'm gonna show you. This is full transparency now. I don't do this often, but I'm just trying to prove a point, right? What's up, Khalif? I'm glad you could join me, bro. I'm just making a YouTube video and just tune in and listen to me. I actually still have a runner. I closed the majority of this position. I'm up 5 figures in profit this week. But I just want to tell you what I made on this gold trade. All right. I placed 2 positions on it. Each position, I put 5 lots each. All right. On my first position, I entered the trade. I'm just gonna screenshot it and put it on here. Full transparency. And I'm also gonna screenshot the runner that I have on here, meaning that on one, I told you I placed 2 5-lot trades. Okay. And I closed one whole trade, and then I closed 4 lots on the other trade. So that means I have 1 lot running. Let me go ahead and post this in the Discord so I can bring it over here. That's the runner that I have going right now. Probably get stopped out in profit, but here it is right here. Okay. 1628.42, 1626.59. Right there. My second position was around here somewhere. Not really sure exactly where, but it was around here somewhere, okay? All right, again, there's my runner. And here's the profit that I made. Now, I just got Jazzy on. What's up? So I'm gonna catch you up real quick on what I'm talking about. I'm talking about dealing in small price ranges, right? A lot of people want very high risk to reward trades. I'm here to tell you right now, that is not how I got my account up to 6 figures, bro. I started with $500 and I got my account up to 6 figures. And and I prove it day in and day out. I don't have to show people my house where I live at, all that shit. Like, I do shit like this just to prove that I can do it on a consistently like August 4th, 10K is what I started with. I had this account up to $220,000. I just took some stupid losses today, very big losses actually. So I had this account up to $220,000 today. And I was being reckless trying to prove a point to somebody, and I was losing on purpose, basically. But that's beside the point. You can grow very small accounts with very small price swings like this. You got to use your leverage properly. You feel me? So 2,600 and 1,300, roughly $4,000 on this little bitty ass trade. Understand what I'm telling you, right? It's how you use your leverage, man. And that's where price is currently at. And I'm running a couple $100 in profit. Basically, what I was doing in this video, y'all, is just recapping on the trades that I took this week. All right. I pretty much done went over all of them, but for y'all's sake, I'll touch on it again. And just to, give you an idea of what I look for every day. I'm bearish, right? I'm going into the week bearish. I actually started the week out with a trade that looks something like this, very small price swings, right? As soon as price traded up here and took out that high, I was out. I was out of that trade. And I make very precise exit strategies. You know what I mean? Like, these are not just random areas that I put on the chart. These are legit areas that I exit the trade from. I enter in this fair value gap. New York open. I waited until New York open, and I got my bias from what I seen Asian and London session do. And this is why I tell people New York session is the most beneficial time to trade in a 24-hour time span. London open, expand. Around 4 or 5 a.m., I expect this to happen, okay? If I get a expansion there in London, I expect for price to start retesting going into 5 a.m. And this ain't something I come up with. This is behavioral patterns. It happens every single day almost. I got this retest, right? And price started breaking down. I got on the charts and I didn't see anything until a little later. Look what happens. We get a displacement right there. You wait on this next 5-minute candle to open. The fair value gap has not formed at this point, right? We got our displacement. That's obvious. You have to wait until this next 5-minute candle opens. It closed right here. That next 5-minute candle open, and what it do? Rebalanced. It rebalanced this sell side imbalance, and that's where I pulled the trigger at. And the outcome of that, wait, what time you gonna close the trade? If you're entering a trade at New York open, what time are you gonna close the trade? You can't hold it all day or all week. Why? Because this is a Monday, and I'm not sure if price is gonna trade down and create a low of the week and then go up for the rest of the week. I'm not sure at this point. All I know is that we bearish on the higher time frame. So I'm looking for sales, and I'm trying to catch the lion's share of the daily range. And that's what I come into my trading session every single day and try to do, is catch that lion's share of the daily range. And for the most part, I do a pretty damn good job of it. And I'm closing my trades going into London close. That means 11 to 12 o'clock New York time, lunchtime. Why? Because look what happens. We're going into 11 o'clock right now, 12 o'clock right there. Look what happens. Look what price starts to do. You don't want to be a part of that, right? No, you don't. All right. Asian session. Look what price does. All we're doing right here, this new daily candle opens, bro. Think of the power of 3. Accumulation. During Asian session. Manipulation during London session. And expansion, distribution during New York. If you come into your trading day every single day with this mind frame, with this perspective, you can't lose, bro. You can't lose. It's such a blessing to have the patience to stay the fuck away from Asian session and London session. A lot of people don't understand that. Y'all gonna see though. People gonna realize it. All right, there's London session. We made a significant high going into London session, right? All we're doing is retesting this expansion. If I take the high from Sunday and drag my fib down to the low, look where price reacted from. Ain't nothing magical about these fibs. I'm just trying to figure out what price is doing right now and why did it jam up like this, right? Because this new daily candle opened, it traded up first to trip up retail traders, people who are in here chasing price. They're looking at price, seeing it go up, so they're immediately looking for buys. But that's not what we do. The same thing that happened over here, you see how Asian session here, we went up, then right here at London, we started breaking down. Now watch. We start breaking down there in London. Going into New York session, there's our displacement right there. Here's the thing about New York. It has different characteristics. The same thing is not going to play out every single time. For the most part, the majority of the time, and you can backtest this, the majority of the time, if it is going to be a down close day, London session will give you your high of the day. But every once in a while, New York session, we will open and then we will jam up to take out London session's high. And when that happens and you see it, this is where you need to be selling from. This is called turtle soup. I was talking about it before either one of y'all got on because I caught a turtle soup trade this week on GJ. This is a low risk sell model. As soon as price takes out this high, now how many pips above this high do you think it went up? I would have guessed 10 pips, but it went up roughly 6 pips. Look at that. If you would have sold from inside of this rectangle box, you would have been golden. But I didn't catch on. I didn't see it. I was waiting on this displacement. And after that displacement happened, I seen this little pullback. And that's when I got in the trade. Where did I close my trade at? London close. That's a small 45 pips. Small dealing ranges. Now we're going into FOMC. And when you have a red folder news driver like FOMC, the best thing to do is to be patient. And I took this trade. Hold on, I'll show you. I took this trade right here at 0.99300. I took this trade and I ate good. Why? Because this is a breaker. We got that. All of our trading rules add up right here. Tell me it don't. Purge the buy side liquidity. Rule number 1. Rule number 2, clear shift in market structure. Got it right there. Identify displacement, fair value gap. We got it. right here, displacement, creating a fair value gap, bearish breaker, the last down candle prior to the purge of liquidity. This box right here is only highlighting this last down candle prior to the purge of liquidity. And look how price respected it. A breaker coupled with a fair value gap is the most powerful setup you can ever trade. And I'm not even gonna show y'all my profits on this trade. I'm not even gonna do that. But I held it all the way until this morning. When New York session hit, I was on the lower time frame and I seen this happen. And when price came back down, I got out of it. Going into this is a New York session reversal. Now, if price would have started pulling back around this 5 a.m. area, we got this expansion there in London. Going into 5 a.m., if we would have started pulling back, I would have went short, right? But that's not what happened. We expanded all the way down into going into London. Going into New York. And when New York session opened, we had a displacement to the upside, breaking structure by taking out this high. In doing so, I automatically knew that we were going to go up. Price retested and then expanded higher. There's characteristics in price and looking at these candles, looking at live price action. You have to recognize what it's doing. I tried to buy right here and got stopped out. I tried to buy right here and got stopped out. That's perfectly fine though. Not mad. Overall, it was a damn good week. I even traded gold this week, and I never trade gold. Well, I'm just trying to like tally up all these pips, right? That's 1,000. That's, let's see, 19. That's 3,000. That's 3,900. 4,200 pips total this week. And that's not even counting all the pips, right? That's not even counting all of them, because I know I didn't highlight every trade that I took this week. I just highlighted the bangers, the ones that really made me some money. Now going into tomorrow, y'all gotta understand that it's NFP. So now I don't know if y'all was active in the chat, right? When we were talking about what price is gonna do right here. No, I'm not gonna stop trading. I know ICT does that. ICT stops trading in November and he doesn't pick back up until like February, which is very strange to me. I enjoy trading and I'm not rich enough yet to take 3-4 months off. You know what I'm saying? ICT just went and bought a $2 or $3 million house. You know what I'm saying? And he had like, I'm not at that level. Yeah, I make a good living, but I'm not at that point yet to where I just feel comfortable taking months off at a time, you know? And I understand why he does it, but I don't understand why he chooses to take that long off. See, what happens is at the beginning of each year. So let's just go to maybe a 6-month chart, and let's go to Euro USD, right? You know what? Let's not do that. Let's go to a 1 month. And we're going to get our vertical line. And we'll start right here at 2012. It's called seasonal tendencies. I know y'all probably heard me or ICT talking about it before. And what you mean by when you said that price moves weird, it's not really that price is moving weird. You just have to understand what type of environment you are in. What, like on the higher time frame, understand what type of environment you are trading in. That's very important. That's why I tell people always pay attention to the daily time frame. Before each session, you need to be looking at the daily time frame and trying to determine where that daily candle is trying to get to. So I just highlighted like a bunch of years, right? And now we are going into 2023. And here we are, right? So at each line, that means a new year is starting. Look at the price action surrounding each year at the beginning of each year. What y'all think? You see it? Price either is gonna reverse, go into a consolidation, or like right here, it's gonna open up and just continue trending, right? I don't think this is the type of price action that will keep me away from the charts. You know what I mean? Because I understand in my mind that price has a high probability of doing one of three things, and it's process of elimination. You just got to watch price. You got to understand where we are related to this dealing range. This is our dealing range, dating all the way back to 2000. 22 years later, this is our dealing range, period. We are approaching that 79% retracement level, and we have points of interest over here. We have a fair value gap right there. We have a fair value gap right there, right? We have, this is gonna make like high resistance to price. This level right here is we're gonna see some resistance. Price is not just gonna jam straight down through that and take out this low. I do not believe that's gonna happen. I think that this is a good area for price to react, to trade up higher in order to, let me clear up some of this. So it kind of reminds me of what price did right here. The low of 1985 to the high of 1992. Here's the low of 1985, January 1st. We expanded higher. We took out the high of 1979. And then we, usually when we are going into a reversal, you will see a pattern like this. We'll create a high, a higher high, a higher high, usually 3 of them. And then we will fail to make a high, a higher high. And you really don't know for sure that price is going to reverse until this happens. You see that displacement? And then we took out this low right here. This is it. This would have been your entry. And what would you have targeted? What would you have targeted? Knowing that this is our dealing range, this area right here is what you should have targeted. From the equilibrium down to our kill zone. Really, this level right here, from 62 to 70% retracement level. If you would have sold from here and rode that motherfucker down for 3 years, 2.5 years, like that's insane. That's 3,500 pips. But that would have been a beautiful place to take profit at in regards to our dealing range. So we seen what happened. This is back testing. After price got into this level, we would have been looking for buys, right? And what would we target from this kill zone level? What will we target? It's simple. This high. This high right here. Just like what happened right here. You see that high? Look at these blue lines. This is buy side liquidity. This is what price is targeting. And price is fractal. So it's literally on every fucking time frame. What I'm showing you right now happens on every time frame. Now let's think about what we're seeing right now. I'm going to throw the fib on here one more time. Just to show you what I mean. All right, here's that kill zone level. There's our target for that one. Here's our target for that one. That was a very deep retracement. You really don't have nothing to work with right here. This is when it first started. But it's still overall the same thing. We started right here. We had a huge expansion. We capped off and made a high. We retraced and we targeted that high. So once that high got taken out, look what happened. Deep retracement. And each candle is worth a month. So anyway, let's move on. So now that we created this swing low, that is solidified as our swing low in our dealing range. So this is what we are anchoring our fib on. So we're going to drag our fib up to the swing high and extend that out into time. And the same thing we did with this arrow right here, we're going to do it again right here. We approached this kill zone level and bounced up crazy, right? We bounced up for there you go. For 9 months. We came down and hit it again and bounced up for 13 months. This is inducement, right? Where price expands, comes back down, makes a low, trades up, takes out that low, and then expands. Y'all know what I'm talking about, right? I'll show you, just in case you don't know what I'm talking about. Right here. Price expands, retraces, makes a short-term low, expands, trades down, takes out that low before continuing. And tell me that's not what we're seeing right here. Let me clean this up so I can show you what I'm talking about. All right. Keep this in mind right here. As I'm showing you. Here's that expansion right here. Here's the retracement right here. And then price trades up, which is what it did right there. What did it do after it traded up? Down. Now what are we looking for? This part. And we got relative equal highs right here, meaning this high and this high. So these are targets. We're in the fourth quarter right now, so we'll go to a 3-month chart. And look, it brings things into perspective a little bit better. We just got a new monthly candle open. Okay. 3 days ago. And since the new monthly candle open, we need to keep in mind of where we at on the higher time frame. We dug down in here. I'm telling y'all what's about to happen. It's gonna take some time, and I don't even know if some of y'all be with me or not. But if y'all are still here, yeah, I want y'all to remember this video because I'm gonna post it on YouTube. I strongly believe that this is it. We could possibly spend the next 3 months coming back down into here a little bit, or maybe even trading down into the opening of this order block. Is very possible. But I doubt it. We're about to start seeing some up movement. But what happened when price traded down into that 3-month fair value gap? That's when we started developing this bullish structure. Price traded up, came back down. It nailed that 79% retracement level to the pip. And what I'm doing now is showing you 50% of the order block, right? This is our order block here. It's not this one. It's this one. You take the body of this last down close candle, not this one because it's not big enough. And look, 50%. It nailed it. It jammed up. We created a new dealing range from this low to this high. Extend that out in the time. And look what happened. So think about what I'm telling you. Price reacted from the 3-month fair value gap. Expanded. Retest. 50%, the mean threshold of the order block, right? Reacted very strongly. It jumped up 250 pips. We turned around. We retested. Kill zone. The significance of the 3-month candle is you have quarters, right? From a 12-month span. We're in the 4th quarter right now. You get what I'm saying? Quarterly, yeah. So that's the significance of it. Now, let's see where we are at right now in regards to this whole dealing range here. And I want to look at this one. That's a very deep retracement. That's a very deep retracement. I don't like it. You can't really. Going into the end of the year is kind of tricky, y'all. Like, I see the bullish structure starting to form, right? But why y'all think I've been selling this motherfucker, right? Is because I have to. I was targeting this volume imbalance, and it literally hit it twice, and I made money off of this daily point of interest 2 days in a row. I made money off this daily volume imbalance on this day and on this day, right? And going into today, I figured it was going to be that we are in the middle of a daily expansion. This is what I was talking about on the live call yesterday when I was saying, if you know you are in the middle of an expansion, you have to find your way in it. Like, let's take this example or this expansion as an example. We are in an expansion and price is predetermined to go lower. In order to catch this move, especially if you know that it is targeting a previous day's low, you have to find your way inside this one way or another. I sold from here. I believe it was right there. Can't remember. Yeah, I can't remember. But all I'm saying is you got to get in it one way or another. And it's all about time and price. Once London session and New York session kicks off, you know price is gonna expand. This 1 minute time frame will be your best friend because it literally gives you multiple opportunities to get in. Going into tomorrow, I would really expect I would really expect this area to get touched going into tomorrow, right? So let's think about it. TGIF, we have liquidity right here. This is going to be our next draw on liquidity. Going into tomorrow, if this low gets taken, I would immediately be looking to ride price up like that. But it's NFP, so you got to be careful. You see how price whips all up and took out all this liquidity before trading lower? It's either gonna whipsaw down and then go higher, or it's going to whipsaw up and react from this fair value gap or up here and then trade lower. So if it whipsaws up, y'all seen the way I entered this trade right here, right? It's the exact same pattern that y'all seen me trade on SPX 500. It's the exact same pattern. You get this big whipsaw, and then price gives you your trading rules. Purge of buy side liquidity, displacement, fair value gap, entry. It's the exact same thing. And then right here, this would have been a beautiful trade too. Look what it does. You see this low right here? It literally trades down and reacts. Why does it do that? Because retail traders are going to look at this as an area of support. They're going to immediately think, wow, this area right here caused this big, huge spike up. So when it comes back down here, it's going to do the same thing because that's the support and resistance theory. But we know better. That's what that is, a target. Comes down, literally, the exact same price almost. And what does it do? Pops right back up into our entry technique. This stuff is golden, y'all. I'm telling you, it's golden. There's not a strategy out there in this industry that is topping ICT shit, bro. Trying this long on GU. So this is technically a breaker coupled with a fair value gap, which is, literally one of my favorite setups. So there's our breaker right here because this is the last up candle prior to the purge of liquidity. We got displacement, shift in market structure, price returning right back to that last up close candle and the fair value gap. So that's why I entered that trade. And I also just placed a long on Euro USD. Okay. I just placed it somewhere. I think it was within this candle right here. And I just dropped 50 lots on this GU trade because I need my money back. That was a fluke, man. Losing off this shit, that was a fluke. Watch it end up like taking out this high anyway. And when it does, I'm just gonna be sitting here shaking my head like you damn dummy. But shit happens like that, you know? We all fuck up. I take it harder than most people though, to be honest. Especially when I feel like I'm the reason people are losing money. I really wanted to get in on a GJ buy too, right? But the reason I didn't is because I didn't really see anything to enter. Well, that would have been nice. That would have been nice right there for real. And it didn't really give us no movement at NLP, right? But we did purge liquidity from Asian low. So check this out. If price can get back down to this level, oops. If price can get back down into this level, I would say go long, right? We have a nice size buy side imbalance. This high right here. I don't know. I would say it would be safe to go long right there, but I don't think it's gonna come back. It might. All right, for those of you who just came on, I got my ass kicked by SPX 500. I was trying to buy during this and I got stopped out pretty bad. Same for NASDAQ. NASDAQ really took a chunk off me, but I entered a long on GU and I entered a long on EU. And I really like this long on GJ if it can give us another opportunity to get in. Like I would really love for it to see trade back down into the high of that. The high of that fair value gap right there. That would really be nice. But if not, I would be looking to get back in, like I said, on this 1 minute right here. All right, let's see what we're gonna target here. I really started to sell Euro USD when I seen it push up into this area, right? But being that it's Friday, I don't know, man. Hopefully we can get lucky and it can come up here and clear these highs. I wouldn't bank on that though. If anybody took a loss on those NSC trades that I took, my bad. Hopefully y'all got it back with these two trades. That's why I don't never like waking up and immediately jump on the charts. My routine is usually waking up at 7 and getting myself together and being on the charts by 8. I just made back the majority of my loss. Dean, you're on here, right? All right, so this is a perfect example of a breaker. What we were talking about last night. You see how you have previous day's low right here. Okay, when NFP kicked off, we immediately jammed down and took out that low. Once you get more advanced at it, you could actually pull the trigger or put a buy limit right here at this low. It's possible. It's called turtle soup. It's what ICT calls it. But the more safer approach is to wait until the shift in market structure and price returns back into the last up close candle prior to the purge of liquidity, which is this one. And the areas that you want to highlight within the breaker is the bodies of the candle, the opening, and the mean threshold. When it comes to breakers, for some reason, that 50% area of a breaker gets hit the majority of the time, right? And then you have a fair value gap coupled with it. And ICT said it all the time in 2021 mentorship, how that's his favorite setup and how it's the most highest probability setup. That's the reason I pulled the trigger on GU. The reason I pulled the trigger on EU was not the same. This is more of a, I don't know, institutional order flow entry drill kind of. You got two fair value gaps right here. This is the one that I feel like price was mainly reacting off of, mainly because price did wick down and dig into this one. But if you flip to a line chart, then you can tell the majority of the volume remained inside of that fair value gap there. So this gold trade did really good for me. NFP looks like we traded down and took out London's low. And then immediately afterwards, this would have been your trade right here. This is also a breaker, but it's kind of a hard breaker to identify. It's on the 1 minute. But I would say this last up close candle right here, prior to the run down, would be your breaker, and price returns right back down into that. God damn, that was loud. All right, so this is where I was going to close the trade at. But the volume that is behind gold right now, I'm going to try to ride it up until it gets right here. Y'all, man, I was not expecting gold to take off like that, man. I was really expecting gold to. I had a trade on gold on this trading view paper account, but it knocked me out. And I took some losses on this shit yesterday. Like, this account was at 220K, and now it's back down to 170 right now. It's ridiculous. What y'all think about this though? Do y'all think this is enough to stop price, or do y'all think price is gonna get back up here? Hopefully y'all got in one of these trades, man. Hell, y'all probably too shook after seeing me lose on fucking those indices. But GU is moving great, man. GU is really moving good. That was a great trade. Stop loss right below the breaker. That's how y'all would trade a breaker, okay? If it's a legit breaker, you want to put your stop loss below the breaker. ICT talks about it all the time. Like when you are trading a breaker, price should not trade below 50% of that breaker. All right, we just hit 73 pips on GU and 45 pips on EU. So if anybody's in them trades, then pay the trader, man. Pay yourself. I closed partials on both of them because I just don't really know where they're headed, okay? The only thing that I can tell you is to take profit inside of this fair value gap. There's a 4-hour fair value gap. Let's see. I really could see this daily candle rebalancing pretty much the whole imbalance from yesterday, possibly even getting up into here. Previous day's high, but I think that's a far stretch. So I'm looking at it like this, from this swing high down to this swing low. I don't know if this is truly going to be like a reversal and price is just trying to jam up, which it definitely kind of looks like it the way it's reacting. All right, look at this swing low up to this swing high. And that 79% retracement level. This is a classic TGIF setup, y'all. Classic. Especially on GU. You see how we have Thursday's low right here. And going into New York Open on Friday, we jam down, take out Thursday's low, and let's look from the high to the low of the week, and price is already traded up to 30%. Now, if it can get up to the 50%, then that's a damn good Friday's reversal trade. If you could get in anywhere below 20% and ride it up to from 30 to 50%, then you successfully completed a TGIF setup trade. Honestly. I want to click on SPX and NAS so bad, but I'm not doing it. I'm not looking at it. Fuck it, I got to look at it. Oh man, come on, bro. Why does that happen to me? Why? He said LOL. Damn. I know that's how I feel. LOL. Goddamn. I'm sorry. Excuse me. Forgive me, Lord, for sinning. That pisses me off, bro. And I was really gonna give it. I did give it a chance to like react from here, to respect this level. But no, you just had to come right down there and take out that low and then get your little monkey ass back up there. And it's not going to sell off. That's not what it's doing. My bias was correct, but I was not expecting a freaking retest that deep, bro. Like that aggravates the piss out of me, especially this US 30 trade. Like, golly, dude. don't that just aggravate the piss out of y'all when that happens? Like, all right, we hit 88 pips on EU. Did anybody get in these two trades, man? No, probably not. I only took the losers. Damn, bro. I'm sorry. I'm really sorry about that. Really sorry about that. Let's see what GJ is doing. I really did like GJ. It did give us a small little retest right here, y'all. But GJ looks good, man. I'm not gonna lie. I really like GJ. Maybe this is a possibility to re-enter GJ when it trades down into this fair value gap. Okay. So let's pay attention to this high, which is roughly consequent encroachment of that fair value gap. We just traded up and took out this high, which would have been a nice target if we would have got in down here where I was initially anticipating. Damn, man. Like when I first looked at GJ, my first thoughts was, okay, it's doing what the rest of them are doing. We just took out liquidity and now we're pushing up. But it did not show me any, like, look what NFP did. It wasn't really no volatility injection on GJ. So that's why I was kind of like, yeah, maybe GJ's a dud today, but it really did great. All right. We jumped up to 73 pips on Euro. I know it's probably hard to take, like Dean said, he only took the losers. So like if you see somebody, I'm just trying to put myself in y'all's shoes, right? I'm over here thinking to myself, like, damn, why didn't they take the EU and GU trade? But I fully understand why y'all wouldn't take them trades. Because if y'all did take the indices trades that I took and lost, then why would y'all turn around and take two more trades that I placed again? You know, but eventually y'all will start to trust me more. All right, I think I'm about to close another partial on EU and GU just because it kind of looks like it's trying to turn around a little bit. I don't want to be a part of no deep retest. Not when I'm running this much in profit. So I'm gonna close partials again, and I believe there would be a possibility for a re-entry on both of these trades. This one kind of reminds me of what GJ looks like, right? So it's a possibility to trade down in there. Set a buy limit at that high. But be aware when price trades down and take out this low, it could definitely pull a entry drill, trade down, take out that low, and do something like that, right? Look, GJ is already doing it, y'all. So it's ideal to want to see it trade down in the here, right? That's what we want to see, but I'm telling you, There's a strong possibility that this is an entry drill. So what I would do in a situation like this is place a small position, like right now. Leave yourself, like leave a buy limit at this area. Place a small position on it right now, just in case it does decide to react from here and continue trending, right? That's the way you trade fair value gaps, bro. You know, you can keep an eye on the 1 minute time frame, and notice how we have a little fair value gap right there. Y'all need to take this. Hey man, I don't want to say y'all need to take it and then it be a loser, but I got a lot of confidence in this trade right here, y'all. I really do. I really think this is a opportunity for a continuance to the upside. I had my ass kicked too many times by NLP, so I'm a little weary to trade. Bro, did you really get in there and try to trade NLP? Why'd you do that? I wouldn't recommend anyone try to get in and trade NLP. Like unless you truly know in your heart what price is gonna do, you know? Like if you would have stuck, like how can I say this? All right, if you would have stuck to the concepts that we're learning here and immediately went to thinking to yourself that it was going to be a TGIF setup, which is what we anticipate to happen every Friday, right? If that's what you would have came into today looking for, then that would have been a beautiful fucking trade for NLP, because on almost every pair they drove price down, ran out previous Thursday's low, and then continued for the TGIF signature pattern, right? It's beautiful. I hope y'all got in on this GJ trade. I don't think it's gonna give you too many more opportunities to get in. It's still a good place to get in right now. Mia, Mia, hey, Mia, please stop. Thank you. Hey, is it just me, or do y'all have anybody who has a dog? Do y'all hate when they sit there and be like all licking on themselves and shit? That shit gets on my nerves so bad, bro. Especially because it's so quiet back here in my office. It's so quiet, and all she like the only thing you hear is her back there like smacking, chomping down on herself. We running 80 pips on EU. I keep saying we like y'all took the trade. I'm running. I don't know. Should we close it when it gets back up into this volume imbalance? No, because this is kind of probably like resistance for retail traders. Like they're probably looking at this like support turn resistance, right? Ouch. Ouch. All right, looks like GJ just jumped down into that level, y'all. Yeah, that buy limit got activated. Who's in it? Who's gonna take it? Who's gonna take it? I mean, Chris said he's in.
Yeah, so where was the self stop if I got in there? Under the zone or under the candle?
On GJ,
Yeah.
I would say like right here where I got mine. I would say right here where I got mine. And I mean, that would be an ideal place to put it. But look, I'm trying not to get too caught up on this 1 minute time frame. I really don't feel like price should come back down into this level at all. But yeah, I would say right there where I got mine, bro, because it's showing a nice reaction from the area that that we predicted, right? So it's looking good. It's good. Y'all ever seen that movie Bruce Almighty with Jim Carrey?
I saw
No?
both of them.
Huh?
I seen both of them, Bruce Almighty and Evan Almighty.
Those are classics, dude.
Yeah, and then you got Morgan Freeman as guy, so hell yeah, it was good.
Right. Morgan Freeman's the GOAT.
He is.
Let's gird. What does that mean, bro? He said let's it's it's gird. Oh, okay, I see now. I get it. That kind of went over my head at first. Come on, GJ, don't start your bullshit, bro. You make me come to Great Britain, kick your ass. It's showing a nice rejection from this area that I wanted to see though. I entered my trades on GJ a little too early on my live account. I'll show y'all where I entered at. I entered too late actually because not really. I guess I entered right here at the top of the fair value gap and suffered drawdown, and I'm still in drawdown. If I would have been smart, I would put a buy limit on my live account like I did on this one, but I didn't. Man, it's 2 days in a row and slept late, man. See what happened, man, when I was on vacation, I had my phone sitting next to the hot tub. We was in there chilling in the hot tub, and my girl, she wanted to play too damn much and ended up splashing water all on my phone, and it already had a crack in it. and water got right in the fucking crack, and it messed it up. So I'm using a different phone, right? And last night before I went to bed, I turned my volume up, took my phone off vibrate, and made sure my alarm was on. And it didn't go off. I don't understand. It's not like it's, going off and I'm just not hearing it. Because usually I'll wake up before my alarm goes off. Literally all the time. Probably 5 or 6 days out of the week, I will wake up like 3 to 5 minutes before my alarm goes off. But I don't know. It's just not wanting to play fair. Maybe God did that for a reason. Maybe God's like, you know what? It's NFP. You don't need to be awake during NFP. All right, y'all. So let's consider the possibility that price will trade down into this 15-minute fair value gap. I'm not saying that it's going to, but let's just consider that possibility because it did just create a 15-minute fair value gap as soon as this new 15-minute candle open. I like how price traded down into it, but it didn't dig into it yet. So let's just consider that possibility. Man, gold is still going, y'all. Like, I'm not believing this, dude. That's insane, bro. Like, I literally only had 0.50, 0.50 on that trade. And I woke up and was like 1,500 in profit. That's insane. And now all I have is 0.15 on it, and I'm 675 in profit. Damn, a lot of people done left out, didn't they? Just give it room to play out, though, man. Just because you're in drawdown doesn't mean nothing. You got to keep your eye on the bigger picture, right? Price could definitely trade down into this order block. If it does, don't invalidate the trade yet. Still holding my positions. I got three positions on GJ. I got 2 up here, and I got 1 as price was trading into this 15-minute fair value gap. Gold hits that 1675. Man, look at that, bro. I'm very proud of this trade, y'all. If y'all go back and look at my trades from last year, man, dude, I was such a beast trading gold. I traded gold so much. It's kind of like how I am with Euro USD right now. And I used to set so many limit orders, dude, last year on a lot of my trades. And gold was one of them that I love to set limit orders on. And I used to bang out so many good trades on gold, but I just kind of fell back from it. Last year, my watch list looked like I didn't trade too many pairs, but all of the GBP pairs, I loved them. Like GBP NZD, GBP odd, GBP CAD, those were my favorite. And I still love those pairs. And it takes everything in me not to like trade those. I be wanting to because I really love the pip value on them. I really love the way they move. GBP pairs are great. But I just narrowed it down and I kept GU and GJ. All right, y'all. I don't think GJ is gonna fail us. I think GJ is gonna do the right thing. We reacted from this 1 minute fair value gap, traded up this down candle, respected this last down candle. We jammed up again, this down candle. It just needs to respect this last down candle. And we just need to start working our way back up. We about to open up a new 5-minute candle. I'm just hoping it don't decide to come down into here. I don't think it will, because this is an institutional order flow entry drill. We created the fair value gap. This 5-minute candle open, traded down into it to take out this low, and then took off in quite a hurry. And the way that we displaced to the upside and took out this high is the main reason I wanted to enter the trade right here. You know, but then when you asked me where your stop loss should go, I jumped on the 1 minute time frame, and I seen this fair value gap along with this one right here. And you see how price traded right down into it. But I think whoever took GJ, I think y'all was good. US 500. I'm not fucking with it, bro, to be honest. Like, I wanted to buy it. Oh my God, why did I just look at that? Oh, that got me sick. I wouldn't, like, do what you do, bro. Sell the hell out of it if that's what you want to do, but I wouldn't. The only reason I'm saying that is because it's Friday and price is doing exactly what we anticipate for the markets to do on a Friday, which is reverse. Okay. I highly doubt that SPX is going to trade up and react to a specific level and then expand lower. You are witnessing the lion's share of the daily expansion right now on every single pair, except for GJ. And hopefully we are about to catch that. But the daily expansion has already happened. You know what I'm saying? So I wouldn't really try to anticipate too much more to happen. Now, if you want to wait until 1:30 when that PM session kicks off for SPX, that would be a more ideal scenario. A more ideal scenario would be to wait until the lunch hour, keep an eye on the chart going into 11 to 12 o'clock, and all the way up until 3 to 4 o'clock. Like, when it comes to these indices, they tend to want to trend during the afternoon, right? Like, back test it. Look what happened right here. The last hour of the trading day, 4 to 5 o'clock, you can catch a nice expansion on the indices. ICT talks about it all the time. And you that 13:30, that's 1:30. That's when the PM session kicks off. So notice what happens right here before 1:30. All right, so this is 1 o'clock. We trade up, we take out buy side liquidity, and then we expand lower, right? We pull back right at 4 p.m. This should have been your entry, and you hold the trade for the last hour of the trading day. And right here at 1800 hours, which is 5 p.m., you close the trade. Courtesy of ICT. Shout out to the GOAT. Come on, GJ. Fuck, man. It looks like it's wanting to go into a little consolidation, which is a good thing, man. Like, if we could get price to consolidate, I feel like it'll bounce up out of that consolidation. I'm going to leave this buy limit right here on GU, but there is a possibility, looking at this 15-minute, that price could trade down into here. Completely fill in this. I'm going to put it at 12,940. All right, gold just hit my level, baby. Yes. let me close the partial. All right. A re-entry on GU looks high probability right now. Just be aware of how far it's gonna retest. But it very well could be an entry drill. But I really like this level right here. My luck, the way my luck's going today, it's gonna be an entry drill. EU ain't showing no signs of slowing down. We ran 94 pips so far on EU. Man, I'm so glad I could recover those losses, bro. And that shit makes me sick just looking at the way price expanded up on all three of these. Good God, dude. Like, that's in fucking insane, man. I would be in mad profit right now. But I panicked. Then I closed the trade. And I should have knew better, man. I was underestimating this wick right here. I should have knew better, man. We all make mistakes. I was underestimating that wick. This is the way I should have been looking at price. To measure this wick for my current dealing range and let price get back down below the equilibrium, in which I was okay with price coming down into here. But as soon as that low got taken out, I automatically said to myself, like, okay, it's going to keep dropping. I can't believe I did that, man. Damn, that sucks. It is what it is, though. Can't dwell on that shit. What's going on? Hello. You just gonna freeze up on me? ICT does ICT does say sometimes to disregard the wicks. Sometimes he does, but you can't. When you looking at a situation like we did on here, like, look at it, dude. Me disregarding that wick caused me to lose these trades. If I would have been paying attention to the dealing range from this wick up to this high, then maybe I wouldn't have been so quick to close these trades. You know what I mean? Because, like, look at that. Look at that big ass run down. That would have scared anybody to get out. But this is exactly why, I love my Forex, man. Y'all notice I do trade indices a lot, but not more than I trade my Forex pairs. What y'all gonna do with GU? What y'all gonna do with it? That's what I want to know.
I'm jumping in.
That's what I want to hear. Fuck it. Look, man, if I was you, let price trade up out of here. Like, let this candle close. Let price trade up out of it and come back down on a 1 minute time frame. Preferably come back down to at least the high of the fair value gap. Okay. We got Tommy Boy in there. I wish I could have caught it down here where I caught mine. I mean, we just ran for 94 pips. And then EU is doing magnificent. It started off a rough day, man. But guess what? We came back from that shit. They're awake. Let me go ahead and screenshot these trades. So can't nobody say I was capping. For some reason people love to try to discredit me. Especially on YouTube. People be talking mad shit to me on YouTube. It really just be haters though, for real. People be hating like a motherfucker, man. Like it's almost as if like other traders don't want to see people doing good, you know? It's really sad when you think about it. Come on, GJ, what the fuck are you doing, dude? Look, man, we I got confidence in this GJ trade, man. Honestly, I do. I don't want to see price get back down below this 1 minute order block, okay? But we got to keep an eye on the higher time frame and respect it and give price enough room to play out. Hopefully when this next 15-minute candle opens up here in 8 more minutes, that is the candle that is going to get that expansion up out of here, right? We got this 15-minute candle completely filling in the fair value gap. We got this 15-minute candle consolidating on the lower time frame. I don't know, bro. Like, think about it, right? Let's think about this real quick. We got accumulation. Now we need a manipulation. So it's a very high possibility that this is our accumulation. We can get a manipulation down into here and then get our distribution. I really want to see this candle get respected though. Damn, Euro, you on GU. Look at that, dude. Come on, man. Trade down a little bit lower, man. I knew I should have kept my buy limit at that high. Those old highs, man. I'm telling you, bro. I had my buy limit right at that fucking high, dude. A new 5-minute candle just opened. Trade down here for me. Fuck me, dude. All right, I'm getting in it. We're still kind of inside that fair value gap. So I feel like, I don't know, I just placed it like right there. That sucks. That really does suck. But it's okay. Man, can y'all believe that shit, dude? That was retarded, man. It probably wouldn't trigger me in anyway because of the spread. GJ, my little foreign boo thing. I went a long time without trading GJ though. For real. We won't tell your wife. Good. Don't do that. Man, gold did me so lovely today, y'all. Yesterday and today. Jordan talking about, I can't hop on the call because I'm trading next to my wife and she's asleep. All right, I'm gonna ask Jordan. I'm gonna ask Jordan if he made some money today. Because if he would have been on this call, and he probably would have lost some money with me, just like y'all did. But guess what? We come back 10 times harder.